Hello Phil, how are we doing mate? Just tagging everyone in chat just so that they get a notification, just in case they want to join. Sometimes the notifications don't come through, so. But I think I'll make a start anyway. Hope everyone had a nice Christmas and New Year. It's been a while. I hope you're all very well rested. Um, wasn't quite as relaxed for me as I'd hoped. Obviously the old Christmas parties are out, aren't they, over Christmas? So I was doing a lot of work for some companies, all having their all their Christmas parties and whatnot. Um, I've actually got some time to myself now, so I can concentrate on obviously updating everything. Being on top of the markets all the time, which is great. We're not in the festive period anymore, so hopefully we'll resume some normal price action. If you remember, prior to Christmas, just one thing we'd looked at was gold, and we thought gold could have been, nearing a completion of a five-wave pattern. If we could just quickly have a look at gold. So this was prior to Christmas. We had this channel drawn. As you can see, festive period, it just doesn't want to play ball. So it's just one of those where when you get into those kind of conditions, the trends, the short-term trend tends to prevail. Um, so yeah, sometimes it's good to just stay out of the way, um, and enjoy your time with your family and sit on your hands and try not to jump into any trades. But I'm on the scout for opportunities now. We are in a euro position on the euro. I'm gonna get rid of this line at the bottom because I'm not seeing this as a triangle. I think, well, it could be an expanded, a running triangle, which is, just to explain what a running triangle is. Where's my triangle tool? Am I okay for volume, by the way? Just want to make sure. We could be getting something like this, which would mean that this A wave finished here. And this is a running triangle. A running triangle is where the second wave of the triangle makes a new low. Kind of like an expanded, when you get the expanded flat and it makes a new low. For wave B, it's a similar kind of thing. Triangles have 5 waves labelled A to E and should have 3 subwaves. So we can see there's definitely 3 in there. It's hard to tell what's inside this wave. It's possible there's 3, could be 5. We'd have to go down a time frame to have a proper look. Here this looks like a 3 to me, going up. That complicates things because it just means that this was a shortwave A, as in time-wise, didn't go on for very long. That was a pretty sharp wave B. Then we've had this really long wave C. It's kind of ugly, so it isn't really my preferred count. My preferred is that we've had, let's have a look, though not the prettiest, an A, B, C up to here. It's not great, to be honest, but it's still corrective. Regardless of which way you look at it, whether we do decide that this is some kind of triangle, maybe with a very shallow kind of angle at the top, or you want to look at it as some kind of flat. It could be a number of other things as well. You know, I don't want to sit here and go over 15 million different possible wave counts that I've got for it. But at the end of the day, we've been trading lower for quite some time. This looks like a 5-wave move to me. We've then had sideways consolidation in this range. So we've got stops up here, which is near the top of the range. You know, if we were playing it safe, we'd have them at 115. The risk reward just wasn't too great up there for me to put stops at 115. So I've put them just a little bit lower. But that's based on the fact that this drop that we've had from 115 was a 5-wave impulse. So I can label that now, just about, without having to go down a time frame. So there's 3, 4, 5. And then we took the trade based on a potential A, B, C there. Seems to have changed up a little bit. We could be getting a double zigzag. So an ABC is known as a zigzag correction if you have a sharp move, then a corrective, and then another sharp move, as opposed to an expanded flat, regular flat, running flat. There's all different kinds of flat corrections where wave B comes down to the lows. A zigzag is where wave A and C tend to be similar length. Wave B is not so strong. Okay, so that's a zigzag. This could be a double zigzag, which is an ABC, and then you have an X wave, which is a corrective and against the trend, which could be this here, coming down to this spike. That would be your X wave. And then you have another ABC, which we could be getting here. So this could possibly still come higher in a double zigzag. And the way we label double zigzags is this one, which is also known as a WXY. So there's my ABC, X ABC, also known as WXY, however you want to look at that one. So there's a chance we could come up, and it might try and test the highs. But you know, C could always tag to 618, and we just get a little move down, up, and that would be, you know, the high. Obviously, the key point being that we've had, you know, this really strong move down, and then just choppy sideways, which to me is corrective. So I think we're going to continue lower from here. In terms of targets, we're looking at potential for, just delete that, some kind of flat correction, which is where we get an ABC to new lows. So we've had in the red count here 5-wave impulse, and then we've had an A up, which is in 3 waves, B wave down, which is in 3 waves, and then we'll get a C up, which is 5. Okay, that's a flat correction, where wave A is three subwaves, 3-3-5 pattern essentially. So we're looking for more downside. If wave A was the same length as C, we'd be looking for 109. You can also use a 618 of wave A, so it takes the entire length of this, times it by 0.618, and it gives us a projection down to 1130-ish. So that's where we're looking for first. Ideally, we want to start clearing these lows this week, and then we can, of course, pull our stops to the highs here. Look to add to our position, get a bit more aggressive with it, so that when the pips do start rolling in, that we've got, you know, quite a good sized position on there. You know, so we're looking at, you can make, you know, 4, 5, 6+% on the one trade. Okay, so that's it for the euro anyway. Let's have a look at the pound. Now I think we've got a very old drawing from me. When was this from? So I'd labelled this as 1-2, and I was looking for 3-4-5 up. We didn't get it. I'm going to delete that. Looks as though we got corrective move. This could have been a flat correction where you get wave B comes back up to the highs, and wave C there. Okay, so just some sort of complex corrective move. 3 waves up to the 128 area. Then we had this sharp move down again. So I'm going to relabel all of this to give it a proper count. Oh, it's got one. It's just not A, B, C, X. I'd say this needed to be A, this needs to be B, and the spike down is C, which is the end of the double zigzag, the WXY. So now we're poised to head higher, providing that this is, this count is correct. So we got lows at 23.80. It was a spike down. We had a spike across the board in quite a few pairs. The Aussie and Kiwi, and I think dollar CAD may have spiked, but I know for certain Aussie and Kiwi did. So where can the pound go? I would say if we're bullish the pound, it could get back to around 133. It's a 38% fib. It's also an area of previous resistance, and that can be enough. The way the dollar has been over the past year, extremely strong. We're well overdue a correction, but it's been that strong. It's a question of how far can it actually pull back before the dollar continues again. So as you can see, I've got red wave 1, and we've got this flat correction. So we'd be looking for 5 waves. So let's draw that in. So from the low, we'd look for 5 up. Yeah, it might not go that high, but just as a representation of what we're after is a 5 wave move. Of course, we know that wave 1 has 5 subwaves. So of course that's where we'd look on a lower time frame for 5 up. So if we take, what's this, the 4 hour, there's nothing really structure-wise that's quite clean yet for me. So I'm just going to wait. If we get a pullback from here where we are, I guess that would be a wave 2, and I would zoom out and wait for 5, and then get a pullback. I expect we could maybe get to this previous high here at 28.17. If we get there in 5 waves and it's clean, then obviously I'll be looking to buy 3-wave pullback. We were looking for the dollar to push a little bit more. All over the Christmas period I was waiting for it to happen. It just didn't. And I don't think it's going to. I think the dollar's just going to correct from here now, longer term. So if I just look at the US dollar chart, this is a combination of all the dollar pairs put into one handy chart. We were looking at what could potentially be an ending diagonal pattern. So I'm just going to put my count in here. 1, 2. This would have been 3, 4. And I was expecting one more high to make a completed ending diagonal. It looks like it's, if that was the case, it's broken down already. Ending diagonals can come back to where they started, which is right down here. So it's got some ways to go. So this is a daily chart. If you compare it to the euro dollar, you've got 1, 2, 3, 4, 5 on the euro. Then we've had a bounce and then new lows. Go back to the dollar, compare it. Same as euro dollar, 1, 2. I think the euro hit lows here, and then the flat correction for the euro was somewhere around here. So if the dollar's coming off, you'd expect the euro to go higher. I'm just not sure it can. There's no reason, if you look at the fundamentals, why anyone should be even interested in buying euros. It's just it's so weak, and being the United States of Europe, it starts and is centered with, it started with Germany, and they're a very strong, economically strong nation, and they just continually add more countries with a weaker economic output, and these countries just aren't really strong enough to be considered, for their currency to be considered as strong as Germany's, which is exactly the issue. There's all sorts of problems. So, but I'm on a short-term trade, aren't we, on the euro? At the end of the day, we kind of have to analyse each instrument as and as and when they happen, and individually, they do different things. The dollar may be really strong and really weak and pull back to here, but the euro could be weaker. It just means that the reason the dollar's come down is because it's weak against the Aussie, the Kiwi, the Canadian, and the Swissy, the yen, everything. So you just kind of have to take some things with a pinch of salt. But in my opinion, we could be getting a weak dollar. As discussed, pound could be a good long. Aussie also spiked, so this could be another one. Not even got a count on the daily there. Let's have a look. Sometimes my charts get mixed up and lost half the time. So that could have been, we tagged new lows, that could have been some kind of flat, similar to the pound. So I mean, we're not in a wave, we've not completed a wave 5. It means that would be wave B. So I'll draw that. So you have A up to there, B to new lows, and then wave C should come up. So again, it's similar situation to the pound. We could go and retest those highs up there in 5 waves. First off, we need to watch the hourly in the 4 hours for 5 waves up, then look for our pullback. At the minute, it's difficult when you get a spike like this. If I come down to an hourly, I think it's still a pretty big spike. So it's not really had a clean pullback for a wave 2 for me to even consider this. So at the minute, it's just off on its own. So I have to kind of wait for the structure to develop a bit more. And of course, we've got a long way to go. If this is correct, then we, getting up to 0.81, we're currently at 71. That's 1,000 pips. So, if the structure cleans up, again, we can look for Aussie longs. For now, it's not very clean, so I'm not doing anything with it. Kiwi could have been a clean setup. Could have. On the hourly chart, it still could be, but I'd seen 1, 2, 3, 4, 5. If we'd have got a decent pullback here, it could have been a valid trade. But it didn't really pull back far enough, and then just launched again back into this corrective channel. If we zoom out, I've attached these highs, copied and pasted it. That actually could have been the channel, because it looks like we broke out, retested it, went to new lows, and then we tested it, had some resistance, and we broke back inside. With corrective channels, we prefer to play it once they've broken out up here. But we tagged the 618, it was pretty clean. On the 4 hour, we didn't even get a close below it. It was bang on the 618, which is really good for bulls. So with that, it extended higher. So now the count, I would say, is probably, that could have been a wave 2. That could have been all we're going to get, and then we'll get 3, 4, 5 way up here. But again, that's not a problem. If we get 5 and we get up to 68.40, pull back 100 pips, you could have stops of maybe 100 and 120. And if we have a look at the daily, you can see that this was going on for quite some time. This is from back in October when this first turned in 5 waves. So we have that correction down to the 618. It's took months, so it is quite a long-term thing, but that's good because it means it'll give us more pips if we get the trade. So it'd gone from around 64 to almost 70. So if this next wave, which is the 3rd wave, could be a wave C, could be a wave 3, which if it's a wave 3 it'd be great because it'd extend even further. But we have to base it on the minimum what we expect, which would be an ABC. So if this 5 wave impulse here was a big wave A, we've then had a correction for B, wave C will get to 71.30. So again, even if we got a pullback and had 120 pip stops, there's still 400 pips to the upside potentially. So and that's just if it's an ABC. If we extend into a 3rd wave, it could go way higher. So for now, exactly the same story across the board really. It's just wait and see. I'm in wait and see mode, but there could be some really nice setups coming. Okay, let's have a look at the Canadian. Canadian absolutely crumbled. I've been waiting for this thing to fall out of his ass, and it finally has. We'd been looking. If you check out the daily, we'd seen like a leading diagonal, which is really just an ugly impulse, to be honest. Then we had a choppy correction, and while this was still bullish, it just wasn't clean. We didn't have a decent three-wave pullback and then a strong impulse. It just kind of chopped its way up there. So it's probably a really frustrating trade for longs, even though people probably made money. I reckon a lot of people maybe got stopped out. Short-term traders got torn apart during this. We've been waiting for a long time, saying that this thing, it hasn't got legs, it's gonna fall. But we'd been saying it for a long time, so it wasn't as if we could take it at these highs at 33.60, because where would you place stops? You could put them just above the highs, we'd have been stopped out. Yeah, so it's just it's important that we wait for it to turn and then get those pullbacks. So far, RSI is diverging down here. So as you can see, we're getting higher lows on the RSI, which is momentum, so we're losing momentum. So the downward pressure should ease off soon. So I would say there's 1, 2. This could be the third wave, or this could be. We'll know in a matter of days. If this thing just goes sideways like this, and then starts coming down, we know that that's a 5-wave impulse there. If it shoots up higher, that could be an A, and then a B, then a wave C, and that means we've completed 5, completed 3, and we can take a short position. Okay, so mainly my bias at the moment is to be short the dollar. The sentiment on the Canadian dollar was at 9, I think, on Thursday, which is extreme. Anything below a 10 or above 90 is extreme. So what that just means is that the market was extremely short Canadian dollars. So people are going to start taking profits, or sellers, buyers are going to start coming in, and that's exactly what's happened. That's what's caused this. So I'm on the lookout for that. It's another one that's on my radar. When the opportunities come, if we do get the 3-wave pullbacks we're looking for, I'll probably just cherry pick maybe 1 or 2 of these. I don't want to take a 2% risk on long Kiwi, 2% risk on a long Aussie, 2% risk on short dollar CAD, because then you're essentially taking the same trade. You short the dollar, they do correlate. So you could end up having a 6% risk on the dollar, and if the dollar rips, you're going to be in trouble. So I will probably just cherry pick whichever one is the cleanest, whatever has the cleanest setup. The Swissy is telling a different story. We've had this powerful move up. That was in September through to November. Since then, we've come lower, but it's been real slow. We've hit a 50%, didn't close below it. So that means that the Swissy could bounce, which isn't necessarily a bad thing, because if the Swissy bounces, it correlates with the euro. So that means euro dollar will come lower, which we are short, so that's great for us. But obviously it means that the dollar could be strengthening. Again, doesn't affect anything we've got open in bar the euro, because we haven't got any other trades open. It just means that the analysis needs to change. And that maybe our Aussie, Kiwi or Canadian setups just don't happen. I'm not keen on taking a trade here because we're in the euro. If I wasn't in the euro, I might consider this, just because it is so choppy, and it looks like 3 down to me, straight to a 50% fib. But obviously, being in the euro, and they're quite strongly correlated, so I'm gonna stay aside on this one. If I was going to take a trade, so if there's anyone here that isn't in the euro, or they're not signed up for the trade alerts or anything, the way I would trade this is, if you wanted to take it at market, for example, when the market opens tonight, it's at 98.62. The way I'd play it is to have my stops down at these lows, because because of course if this price action comes down below here, then the pattern's invalid, because Elliott wave rules state that wave 2 should never come below the start of wave 1. So if you look at this black count here, wave 1, it starts at these lows, yeah, so that's the start of wave 1, this is the end of wave 1. Wave 2 should never overlap the start of wave 1. Okay, so it should never come lower if it's bullish, or higher if it's the other way around. So you'd have stops at the low. Obviously, it's invalid way down here. Your targets, if you were to get an equal leg from that low, and we go straight up from here, your targets are at 103.50, 104 area. So you've got a good risk reward. Your risk reward from a 50% fib is always 2 to 1, because you're risking, let's say it's a 100 pip move, it's come back 50 pips, so it's 50 pips away from the lows now. If you move another 100 pips, then you're making 100 to risking 50 to make 100, which is 2 to 1. Okay, so that's it on the Swissy. Dollar yen, very, very interesting. On the weekly, if we draw from the lows, nice little trend line along there. We spiked down below it. I think it negates the wave E though. That's the only problem, so it would just mean that was a wave C, and that we're still in this triangle, and that it's bigger or wider. But if we just hold this trend line there for a minute, we'll see on the daily that we got real close, but we didn't close. Okay, it needs to close that trend line. If it does close that trend line, the dollar yen's in trouble, I think. If we start closing below here, we're going to go to new lows, since this 104 spike. So we'd probably be coming to retest these, and I think it'd be either a wider triangle, or we'd be looking at some other kind of flat correction or something. But for now, I'm aside. It's important to look at bonds when we look at yen, just because they're correlated so closely. So we had this really strong move up in bonds. I think we got to this point where I started to change my bias. We were running into some resistance. Looked like we might get a wave 4 pullback. I think we were short in the yen, dollar yen at the time. So I think we've kind of avoided the trade just because we were expecting this. It was quite extended. It went a lot further. Dollar yen, came a lot lower. But we're overdue a correction. It looks like it's happening, at least on the hourly. But I'm not tempted to go against the trend in this. I wouldn't be looking for a pullback to then get short. I'd probably wait to see if we get 3 down. And if it's an equal measured move, and that A is exactly the same length as wave C, and it looks pretty clean, that would be my wave 4 confirmed. And we could look for dollar yen shorts to play into wave 5. It's not my favourite wave to play, but the bonus of Elliott waves is that one of the cardinal rules is that wave 4 should never step into the territory of wave 1. Okay, so whereas before I'd said wave 2 can never go below the start of wave 1, wave 4 cannot come into the territory of wave 1 at all, unless it's an ending diagonal or a leading diagonal. Those are the only 2 times. Okay, so you can play wave 4s. It allows you to have tighter stops as well. You don't have to put them way down at the lows like we usually do. When you'll notice, if you've been subscribed to the trade alerts, that we tend to take wave 2s, just because wave 3 is well, not always, but I would say 90% of the time the longest. It can never be the shortest. That's the third rule of Elliott waves. Okay, so we've covered all 3 waves today, all 3 rules today, because there's only 3. The rest are guidelines, but those are the hard and fast rules. So yeah, we tend to trade, we look for a 618 for a wave 2 or a wave B, and we put our stops at the lows. That's kind of what we're used to. but you can trade a wave 4. It just means that, of course, once you start getting into new highs above that wave 3, you're on borrowed time. You don't know how much further you can really squeeze out of a move. But it does allow you to put tighter stops because you can put them, put your stops at wave 1, which is a bonus. But I will have my eye on bonds, so be interested to see how that develops. This isn't massively promising for dollar yen bulls anyway. This kind of looks a bit like a diagonal pattern, ending diagonal maybe, or whatever it might be. It's not ideal for bulls anyway, so I think this could just fall again. Okay, anything else interesting? Euro pound is up at resistance on the daily. So if we draw from the high to this high, kind of made a trend line here. We spiked above it. We are back below it now. Also looks like it was 3 waves up. See here, 1, 2, 3. I think we could at least come and retest these lows. But we are already short the euro against the dollar, so I'm not too keen on getting over leveraged on one currency. And euro pound is quite notorious for taking my money actually, so I am going to stay aside on that one. Anything else? Let's have a look at stocks. I think stocks are actually recovering reasonably well. So we had possibly a completed correction in stocks. That could have been at A, B, C. That's done, and it would mean that these are now heading to new all-time highs, which that's standard for stocks. That's how they work. They hit new highs all the time. I think once we start getting above 3,000 though, the move could be quite limited. Have I got a count on here? Let me see, I forgot one. On here. I haven't. Let's do one. Right, so there's not very much data. This only goes back to 2004. S&P 500. Let's see if we can get some more data. Oh, there we go. So it's worth noting that here, this level there, we had a really big spike in the RSI. So that means that, of course, once we got this high, it diverged. Right, that doesn't necessarily mean we can't get another new high and still have another RSI reading that's really low. There's nothing to stop it. Okay. So you probably count this as either 1 or A. This was what looks like a flat correction to me. So we've gone against the trend, and we followed the trend up to the highs, tagged the highs, then had a sharp drop. So that to me would be a flat correction. So it could be 2, it could be B. Okay, either way it's corrective. And then here I would say we've had, let me just get rid of this now. Possibly 1, 2, 3, 4, 5. This would be 3. I've got a sharp correction for 4. I'm just going to change these and let me explain. So we zoom in now. We know that we've had this flat correction. Now we're bullish again. We need to see this blue wave 3 play out, or C, whatever it might be. So I'm seeing a first wave here, then a wave 2, then a red wave 3, which is going to have 5 subwaves. So 1, 2, 3, 4, 5. That takes us to red wave 3. Red wave 4, which is going to be an ABC, which is here, 1, 2, 3. And then a red wave 5 to finish off that blue third wave. Or it could be a C wave. But either way, once we get up there, whether it's going to completely turn on its head, or that is 3 up and we're just going to correct a little bit for wave 4. This is a weekly chart, and wave 4s tend to line up. So if you get sub wave 4 that's within the blue wave 3, right, so we've got this red 4 here. When you then get to the blue 4, which comes later, they tend to line up, they tend to challenge the same area. So if we do get new highs in stocks, if we just get up there now, and you know, it might go on for an entire year for all I know, because this is a weekly chart after all, but we might make a new high. We're then going to come back and we're going to test this, whether it's whether it's in 3 waves, or whether it's a zigzag, or whether it's a flat. It could be a number of things. We're going to come back and retest it. So then, of course, we're going to have potentially a terminal wave. If this is a 3, if this is a C wave and not 3, then that's terminal, and the correction we're going to get is going to be something like we've never seen before. It's going to be really, really ugly, because it'll be based on the scale from 0 to 3,000 or 3,100, wherever we end up. So something like a 50% correction is going to be a 1,500 point drop, which is going to take us a long way down. But stocks for now, I think they're just going to continue higher. Stocks do correlate with the US dollar. As money flows into stocks, it tends to flow out of the US dollar, so we could see dollar weakness as a result of this. But there's an effect called the dollar smile, which means that the dollar can react positively in a risk-on environment when stocks are strong, and it can react possibly in a risk-off environment as well. The dollar's notorious for kind of doing what it wants, but it's worth knowing that there is a correlation. I want to take a look at Bitcoin just because I think it broke. Let me go back to this chart. Bitcoin. I think we had a channel drawn. Yeah, I can see the channel there. But we still haven't broken back above this wedge. But on the hourly, I had a channel. We've broken above it, but as you can see, we've got this wedge resistance here. I'd like to see us take out those highs, 4,300. It then might be worth taking a long position on a break. So we break back inside this wedge. Alright, we're going to have possible wedge resistance not far off. If you were to take it at 4,400, you might have a $600 upside. If you were to place your stops, at these lows, it's kind of a 1-for-1. But if we break back inside, you could always place your stops just the other side of the wedge. So if we come back in here, there's a chance that actually we might retest it and then go higher. Probably react here, maybe bounce and then cut through. And if we get through this barrier, we're going to 7,000. Whether we'll get any higher than that is, I don't know. It's a mystery. Bitcoin is a bit of a mystery, but yeah, if we break back inside this wedge, we can play some long positions. I wouldn't mind getting longs of Bitcoin. It's been very, very kind to us over the years. Well, I say years. I think the first time I traded it was maybe 18 months ago. We were around the 3,000 level before, of course, it saw the 6-month scream up into 20,000. But we've made some money on the short side as well, so we should be kind to Bitcoin. Let it bounce a little bit because it's been kind to us. So yeah, that could be a potential. That's on my radar. Let's have a look at crude. Anything interesting happening in crude? We could be sharp move up, choppy sideways, and then a third move up. It's not quite as clean as I'd like, but this could be 1, 2. We could have 3, 4, 5, and that would make the end of wave C somewhere up here. Not really keen on trading it, to be honest. We did have RSI divergence down here, so we completely lost momentum at these lows. I imagine we could maybe get back to 55. if this extends, but this has got to really go from here. Otherwise, it's just going to make another new low. Um, but yeah, it's not really that clean, so it's not a setup I'd take, just because the wave structure is a bit choppy on the way up. And as we've said with dollar CAD for weeks, we were saying that this going to the upside, it was really choppy. So it's just not a trade you want to take unless it's clean, very impulsive, and you can see 5 clear waves. At the moment, we can't see 5 clear waves, so I'm not looking at crude for any trades. That's pretty much it. There's not really anything else on my radar. We mentioned gold before. We broke out of this channel. We could possibly come back and retest this, and then continue higher. But I've got a triangle drawn here by the looks of things. Yeah, so got a big triangle drawn. So it's either it's probably a triangle for wave B, I imagine. So just delete that arrow. So yeah, on the weekly, I imagine we could have a bit more upside. Maybe then have a final leg down, and then head much higher. Once that ABC is corrected, though, if we're talking longer term, this would just be a correction. If we take the monthly, for example, that was a pretty strong move down. Then had this triangle kind of correction, sideways move. So this can come lower. Once we've done that, come lower for another 5 waves, and that would be a 3-wave move. So we've had this ramp up, 3-wave moves, which has taken years and years. But this could really get into the low. I mean, I've been waiting for this thing to fall apart, and it didn't break down this triangle. I was hoping it would. We could get short on a break, head down to 600-700. But it looks like we're probably going to head up first. So yeah, that's it from me for this week. Actually, it's not. It's worth noting, actually, you guys that are signed up for the trade alerts, I'm going to be granting you access to a new service that we're doing, which is essentially my chart. So you're going to be able to see everything I analyse. So obviously you only see them at the moment once a week on a Sunday when we do these webinars, and I kind of run through what I'm looking at. So today we've looked at the 7 majors and a couple of other bits and bobs. You'll have access to 20 in total. So it'll be all the dollar pairs, the euro crosses, the yen crosses. It will be the S&P, gold, silver, oil, bonds, and Bitcoin. So it comes to a total of 20 instruments. The charts aren't all updated yet, so it's not quite ready, but should be able to grant you access tomorrow or Tuesday morning. And essentially what that service is, it's twice updated daily analysis service. So you'll see an update in the morning, around 6 to 8 a.m. and then an update in the evening between 6 and 8 p.m. And you'll see the weeklies, the dailies, the 4-hour charts, and the hourly charts as well. And obviously you can use that information however you wish. Trade alerts will still continue, but you'll be able to see 80 charts in total, and you'll be able to see all of my wave counts, and you can make your own trading decisions based on them if you wanted to. Obviously there's some reasons why I stay out of certain things, like I've said with the euro pound. The reason I'm staying away from it is because we're short euro, but if you're so inclined, you can take trades like that, and you'll be able to see everything, so you can make your own kind of decisions. If you don't have time for that, because it would take some of your time up, so it's for people who are trading every day, people who have got time to check it in the morning for an hour, because there are a lot of charts to get through. You'll want to maybe look at the hourly chart every morning at least, if you're wanting to trade frequently. So yeah, for those of you who don't have the time, you don't have to use it. It's there if you want to, and it's free for all of January. We're launching a marketing campaign next week for some new users to come along. But it'd be really great if any of you are interested in the service. Use it. It's there. It's free. Give us feedback. I'll show you what it looks like at the moment. This is just kind of what we have. this is essentially what you'll see. Um, so we have at the bottom of the page all of the pairs that we cover, and you can click through these. We've got different charts. So I click on Euro, you've got a weekly chart here. You can click this and it'll open a new window for you, zoom in and whatever you need to do. You can go down to an hourly chart, have a look at that. You know, and so on for all of these pairs. So these will all be updated. At the moment, we are missing some of the hourly ones and a couple of the yen crosses, but everything will be sorted. Hopefully tomorrow, Tuesday. You'll have, of course, the chart. Then it'll say whether the trend is bullish or bearish on that time frame in particular. And then there'll be a write-up underneath, so it'll say, you know, whether an important fib level, or you know, whether we're in a triangle or a big wave 2, wave 3, 4. You know, it'll give all that information as well. So yeah, that's that. There will also be some updates on the app. So if I just show you the app at the moment, so this is obviously I can't tune this webinar into my phone to show you, but this is essentially what the app looks like. It's just I've got it open on the laptop. So eventually technical analysis, that will be available. The trade room members area, they're all staying on there, and we're going to have some videos. So I think the YouTube channel is now embedded in here. I'm hoping so. It might not. It doesn't look like it's going to work. I might need to update that, but this will have so once this webinar is done, it will be saved on the YouTube in a playlist, on the YouTube channel in a playlist. It'll be available on this videos page, so I'll update that tonight. And then we're going to have an integrated chat room. So at the moment we're using Slack, which is good for all intents and purposes, does the job. But ideally I want everything just to be contained within our one app. So if you hit chat on the app now, it is live now. You can head in there, because I know we've got quite a lot of inactive members in Slack now, so it's just kind of full of accounts that aren't being used, that kind of thing. The only difference being with the one that's integrated with the app is you'll have to actively go into the app to see the chat. You'll be automatically logged into the chat room at all times. It's just that you'll have to, you know, so say for example you ask a question in the chat room in Slack. At the moment I'm able to tag you and you might get a notification. We won't have that feature in the app, so it'll be for, you know, of course you'll have to log in to go and have a look, because as far as I'm aware, I don't think I can get a way to notify you guys if I was to post an update or something. So that would be down to you guys to actively check that. And to be honest, that's what the chat room is for. It's for people to be active anyway. You know, there's a lot of people that sign up to the service that don't use the chat room. You know, they just log into the trade room when something gets posted, and that's the end of it. And you know, a lot of you guys will have more time, a lot of you will have less time. There's different kinds of traders out there. So for those of you who are active, head to the chat room in the app. If you click to join the conversation, it'll ask you to log in. If you just register as a new user, all you have to do is throw your email and a password in there, and it should keep you logged in. Yeah, you can add a picture to it, a little avatar and all that sort of thing. So, but that's where I'm going to start. I'm going to start posting stuff in there now. Probably from tomorrow morning, so the daily updates are going to go in the new chat room. If anyone has, you know, any problems with it, it is new. There might be teething issues, so just let me know. If I need to fix anything, or if there's a certain feature that you really want and it doesn't have, just let us know, because you know we always value that feedback, and we can look to, you know, if it's not any good, you know, we can look at other things and improve stuff. So you know, with it being a completely new service, I've not used it before. You know, it might be total crap. So, but it's worth at least giving it a go. We can integrate it with the app, that's the key point for us. To kind of keep everything in one place. I don't think there's anything else I've added. I believe that's it. That's it for now. So yeah, I don't think I've got any questions. I don't think anyone's. Let me just check. Nope. Oh, actually. Oh yeah, hang on, let's have a look. Sorry, Phil. Yeah, I've just seen you've been chatting on the YouTube channel. Uh, my computer's making a lot of noise. Oh yeah, Phil signed up to the chat room. Just said hello. There we go. So I think I'm not sure if you guys will be able to see on the left when I log in. There's like a members list. You should be able to click on each other's names in there and send. You can send me a private message if you didn't want to put something in the public chat room. That should work, I think. If it doesn't, I'll enable that because I know it's definitely a feature we've got. Because I know some of you guys like to speak to me personally rather than to put everything in the public room. To answer your question, Phil, do you know what? I haven't even watched the news. So Trump shut down. Didn't even know that was a thing. I'll be honest with you. It could impact the dollar, yeah. I mean, when things like this happen, when the news comes out is when it's going to affect it, not when it happens. You know, when something gets announced that it's going to go Pete Tong, the markets react then. You know, when the information comes out, as opposed to when it actually happens. So things like you hear in like the crypto groups that some cryptocurrencies have a fork, which is where they split the cryptocurrency into two. So there was Bitcoin. There was a fork or a hard fork, I think it was called, and they had Bitcoin Cash. You had Ethereum that got split into Ethereum Classic, things like that. And you see in these groups, these people are saying, "Oh, okay, we've got a hard fork on Feb 18th, 2019." You know, I'm looking forward to how price action reacts, and hopefully we'll get a nice bull run and things like that. Listen, the market moves when it gets announced. If the market doesn't move when it's been announced, the market doesn't give a shit. Um, it just doesn't. Something happening, kind of all of a sudden, is going to affect the market. If it was, um, Trump's shut down from today, and this is headline news, breaking news, blah blah blah, it might have an effect. But once that news is out there and it's done, that's the end of it. Um, so I you know I, like I say, um, I'm not a trader that trades based on the news anyway. Um, so sorry, that was a bit of probably a crap answer, but where do you see sentiment figures? So sentiment figures are it's called a DSI, Daily Sentiment Index. Um, you can sign up for it online, but I'm sure it's like a couple of thousand a month. It's actually really expensive. Um, but I'm in a lot of different trader groups. Um, so I've got friends that are traders, and some of these guys are signed up with Bloomberg terminals and all sorts of crazy stuff. And they get this sort of thing, and they just share it around. So it's just something that I get from other groups basically. Um, you can go and get it, but I'm sure it's like $1,200 a month, which you know it's not that useful a tool to warrant that expenditure. Um, so yeah, that's how I get hold of it anyway. And when it does get shared around and I catch wind of it, I will of course share that with you guys, because it can be useful in some ways, but only really when it matches up with the analysis. Um, all right, so yeah, that's everything. I don't think there's any more questions, so I'm going to sign off, guys. Um, enjoy the rest of your evening, and I will see you hopefully in the new chat room. I'll post tomorrow morning an update. Obviously, let you guys know when you've got access to the new analysis and things like that. So I'll speak to you guys later. Cheers. Bye.